Okay, welcome back everybody, and now we are about to enter into the real candlesticks and in conjunction with price action analysis. But before we do that, I just want to clear some few topics before we get into it that are very vital. Okay, now when we are trading in forex markets, right, whether we're trading stocks, whether we're trading synthetics, whether we're trading currencies, we need to understand the economy or how things move around in this world. Okay, fine. For example, let's say you just bought your two cows, right? You just bought your two cows. Your two cows, they are cheap. Always we buy when things are cheap, and then we sell when things are, high. Okay, we sell high, we buy cheap. Okay, so for example, you got your two cows, right? So they are represented like this, right? You got your two cows. Okay, their value is represented like this. Okay, now in future your cows will multiply. Okay, for example, they'll intermingle, and then there'll be more. Right now you've got now 8 cows. Okay, you see, as 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 the more the cows populate, the more the value comes in it. Okay, so you've got now 16 cows, you got now 24 cows, something like that. So you started with 2 cows, so you bought them cheap, but now they are more because populated. They're now more. All right, so you can now sell your cows. Okay, you can now sell your cows. Okay, but you bought them cheap. Okay, you bought these 2 cows, they were cheap. Okay, now there are more, you can sell them. So always, everywhere in the world, guys, we don't negate this system, whether it's a currency, whether it's whatever, we do this. Okay, whether you bought like USD, whether you bought US dollars, okay, and then against British pound, when the US dollar goes up in value, just like how these cows were just multiplying. Okay, because in the financial markets we don't really buy cows, right? We really buy currencies over currencies. Okay, currencies against currencies. So when you buy USD, GBP USD, right? For example, let's just say you bought a pound, Great Britain pound against the USD. So when that pound goes up in value, you sell it when it's high. You don't sell that pound when it's low like this. Okay, for example, you don't buy a pound to sell it when it's low like this. Because what's the point of just buying the currency when you're just gonna sell it at par with its actual price? All right. And again, you don't do like this. You don't buy when the currency is expensive, right? For example, you don't do like this. Okay, you don't do like this. You don't buy anything when it's high, only to sell it when it has lost value. So your economics would be skewed, or it would be just something else. All right, so before we get into price action with candles, understand few things about the economy of the market, right? There is what we call let me just first show you how we do this. Everybody just needs to know this. So for those who think that they're professional traders, not knowing this, I don't know what you've been doing, man, because you gotta know this, man. Unfortunately, for those who skipped economics in their schools, bruh, voila, here's economics again. So here's the thing: when you're trading, right, there is this level that is always there. You can even use this indicator, which is called Fibonacci retracement. So this level right about there, this center level, is what we call equilibrium, or 50%. So again, let me just measure it for you. As you can see, if you touch this point and this point, this is 0%, this is 100%, this point would be pretty much equilibrium, right? So let me just draw right about there. So this point is equilibrium, meaning that it's 50%, right? We don't want to enter our positions on this level, on 50%, whenever we're trading. We want to enter our trades whenever our assets or our instruments are cheap. Whether we're trading gold, stocks, whatever, man, you name it, man. Whether we're trading S&P 500, whatever it is in the world, metals, whatever, you know. So we want to trade when the market is cheap, okay? So here's the thing. We usually want to trade when the market is in the exhaustion levels. I call them exhaustion levels, like so. Okay, so when the market is moving, right, in the market moves like this, okay? As we've been saying, the market moves like this, okay? The market moves like so, and gets into this zone, right? So when the market is moving upwards, we don't want to trade in these zones, okay? Unless and until when we're doing what we call continuations, okay? Fine, I've been talking about continuations. For those who are now knowing what continuation is, we do something like this to try to catch this move, and then we can just catch this move, okay? Fine. This is for buying, okay? We buy when the market is cheap. Usually I like to buy when the market is there. That is when our trend reversal patterns, or our trend reversal patterns, our patterns, you know, for the reversal happen in these zones right about there. That's where you need to catch the market from there, okay? And then these ones will be your bonuses, okay? Don't start with these ones, start with these ones. Rather, when you're a newbie in this game, try to first catch the trend exhaustion patterns first. Try to catch the market when it's reversing, rather than just trying to catch the train when it's moving, okay? Don't catch the train when the train is already moving, okay? Just catch the train at the subway station. So this is where the market ends usually, okay? Closer to the 100% level of Fibonacci retracement, okay? I'll explain about that later on, but always sell when the price is high or expensive. Buy when the price is cheap, sell when high. That's your profit, okay? Fine. How do you look out for your trend exhaustion levels? Like this, trend exhaustion patterns. Your analysis usually does something like this, okay? As you can see, we wait until we see something like this, okay? Let me just move this aside. So pretty much this is what happens, okay? So our setups, we want to see them in the exhaustion levels, okay? So when the market happens, when the market does something like this, you know, and retraces right about there, and then we can sell to right about there, okay? So we are selling, all right? At 50%, when the market moves below that, we are no longer selling. Whether you like it or not, don't sell when we are below 50%, because when you start to sell, the market, what the market can do, the market can use this 50% or any levels of Fibonacci retracement. It can even use this 38.2 to find support and just continues going up all the way. Now, this is how economics work. Never sell when you're never sell high, right? Never sell low. I meant to say never sell low, always sell high. You sell high, you buy low, okay? So these levels from 50% going downwards, these are buying spots. From 50% going upwards, these are selling spots. But the most ultimatum places to sell is these places from 100% to maybe about 75-ish, you know, something like that. That's where you sell. That's where you look for these setups that I've been talking about in previous videos. For those who don't know our setups, go back to the previous videos. You will see them. They are there. They are there for everybody to copy them. Just try to learn them all and then come to this video, and then we can just carry on. All right. So this is it, guys. This is how it works. Okay, so even if they happen this side when the market has been going down all the way up, and then it shows maybe, let's say, head and shoulders pattern, this would be a valid head and shoulders pattern, because one, it's cheap. We can even buy our 2 cows right about there. For that example, we can even buy our 2 cows right about there, and then we can even wait until they appreciate, expand more, populate, until we sell them there, and then we can just take our profits. Simple as that. Economics works everywhere, guys. So let's just get into the candlesticks. All right, let me just pretty much okay, let me just do like this. I think my lessons are still having few. I think my lessons are still having some few minutes on YouTube. So let me just cut this video and just post the other video when I'm explaining deep into this. Okay, I'm sorry about that, but I think I still have 15 minutes to just record and post the videos in YouTube, because I haven't got so many subscribers yet. But I'm pretty much sure they will revise that, because yeah. So guys, just catch me on another video. All right, cool.